one of the big issues on the agenda, one of the big items to deal with. What impact is this having from BT's perspective, your ability to recruit talent, your ability to hold on to talent?
Yeah. Well, first, we've always said the impact on us would be indirect, would be the impact on the economy as a whole. To some extent, our business outside the United Kingdom benefits to a degree from the weakness of sterling. And a key aspect for us will how does the economy, how do things develop in the next 3, 4, 5 years in the economy? And also, we depend a lot on people coming in from Europe, immigrants from outside the European Union for their skills, their capabilities, and we depend a lot on semi-skilled workers for rolling out the fibre networks that we're continuing to roll out at the moment.
Are these challenges biting for you already?
They're beginning to bite, yes. I think we see everywhere that that is beginning to happen. Obviously, the weakness of sterling doesn't mean in euros, and secondly, people are not convinced they're welcome here, and that's a problem.
OK. Matt, jump in.
Yeah, Mike, I wonder what you think about the weakness of sterling here. I mean, it's just had its worst month in 30 years as far as an absolute level, and the shorts are big there, making it possible that there could be a bounce back, at least that all the bad news is priced in. What's your view on sterling going forward, and how do you hedge against the moves?
Yeah, well, I mean, look, first of all, it was entirely predictable, as I think the CBI and many other commentators said, that with the decision to vote to leave the European Union, there will be a significant devaluation of sterling. It's moved pretty rapidly to circa 125. It seems to hold pretty steady there, and I think there are two scenarios here. If I think the market sees that we're getting to really engage practical discussions and negotiations with a proper transition period and proper trade arrangements, then I can see the pound staying where it is and perhaps strengthening a bit, particularly if interest rates go up. On the other hand, I think if people feel that the negotiations are not going well or not engaged, then I think there's a risk of sterling, there's still some downside risk on sterling.
From the outside, Mike, for other companies, this may be a great buying opportunity. How do you see consolidation in the industry being affected by the moves in currencies?
Yeah, well, I mean, obviously, we've seen some big, one or two big acquisitions. We've seen one or two attempted acquisitions, and there's absolutely no doubt that in looking in sort of from an opportunistic point of view, it could be a good moment. On the other hand, as we've also seen, the government, one, does have an industrial strategy, does want to make sure that certain key industries, remain in Britain and controlled in Britain. So I think there, most people looking at acquisitions are also aware that there is a political dynamic to this at the moment.
We'll talk more in detail about BT and where you are on that story. But in terms of your other areas of expertise, Mike, and the many hats you've worn over the years, the financial services industry wrestling really with what Brexit means. Yeah. What's your latest assessment, given we're a week away, aren't we, from the date on which the Prime Minister will trigger Article 50. What's your assessment of how quickly financial services jobs will have to leave, in some cases, London?
Well, I think the bottom line is, things are turning out exactly as was predicted, because if there's a situation where we're not going to be in the single market, we're not going to have free movement of labour, it's highly unlikely we're going to be granted the passport that allowed so many of our banks, foreign and British, and European, to do business right across the European Union. We're seeing that impact now. So obviously banks have had to make contingency plans. People are starting to move people to different locations, both in Europe and in the United States. And that's going to be an increasing trend. And that obviously will depend a lot on what, if anything, can be done on the sort of measures of equivalence in terms of access to European markets and vice versa.
I mean, we've seen, yes, we've got a story just this morning around Goldman Sachs and Morgan Stanley and others. I mean, but other voices tell me, well, yes, there might be some back office movement to, in a very dispersed fashion, to various parts of the EU. But in terms of the heavy lifting parts of the banking balance sheet, certain bank regulators around Europe won't want to have that as an issue on their doorstep, and therefore that will stay in London.
Well, I think London will still remain a very major financial centre. The question is, will it be one of the global financial centres like New York, as it has been, one of the leading in the world? And that's a big question mark. Just euro clearance is a big question mark. Will that continue in the United Kingdom? If not, that could have quite a big impact. No, I think it's just we're going to be less attractive as a base for operating in Europe, and the big, particularly American banks, have to create scale and in the European Union in order to have the passport they need.
When we look at the UK economy more broadly, it's been pretty resilient. It's been more resilient than many had expected in the wake of the vote. Of course, we haven't actually triggered Brexit yet. What evidence do you see of strain on consumers at the moment? You know, we look at retail sales numbers, we look at consumer sentiment numbers, and there does seem to be a little bit downward momentum there. Do you see that on the front line in the boardrooms that you sit on?
Yeah, absolutely. I mean, look, firstly, the economy has been more resilient than most people expected. You know, I think the Bank of England stepped in very wisely at the beginning, was well prepared for this in terms of reducing interest rates, in terms of confidence. So we saw that continue. I think now we are beginning to see a slowdown in confidence. Obviously, prices are rising, wages are not rising. And we're seeing, you know, obviously quite a lot of uncertainty is going to be there in the next, you know, months or, you know, couple of years before we know exactly what the deal with Europe, you know, will be.
Inflation seems to be coming in quite strongly and maybe faster than people had anticipated as well. Do you see a higher rate environment ahead then?
Well, I think it depends. I think, as you know, as the governor said, at the moment, if inflation is a sort of one-off, and if we don't sort of get into sort of, you know, continuous inflation, wage spirals taking off, then I think, you know, you can hold it down. If at any point in time it looks like, you know, inflation is going to take off, they're going to have to increase interest rates.
Okay, Mike.